Good afternoon, everybody. I hope you're well and the market is not upsetting you too much. There's some interesting things going on for sure. I know some of you are nailing it pretty well, so that's fantastic to hear. And our mission today is, of course, trying to unpick it all. Let's start, obviously, by giving you this important message in that this webinar is delivered by myself and the opinions are expressed are of mine and should be not taken as representative of Go Markets as an organisation. And of course, it is for educational purposes only, so please take that in mind. It isn't direct advice to take trading action. G'day, Ross. I hope you can hear and see me okay. You guys should have checked on that before we started talking to you about disclaimers, etc. Hi, thanks, Ross. Cheers, Shane. So, yeah, we're at an interesting place. Now, let's try and unpick some of it. First of all, great to see so many of you there last night at the mindset session. I hope it was useful, and we will be sending out putting together a recording of the session and making that available to anybody who couldn't make it along. If you weren't registered for it, then drop me a little email, which I'll put in the box. Right. So you'll see that in the chat box appearing any second. There we go. Okay, so let's look at what's come across the news today. And of course, it was a very mixed session in the US last night as the markets continue to act somewhat bizarrely. Bond yields remain in focus, even if I've spelt remain wrong. Apologies for that. Let's just correct that so it doesn't upset me too much. There we go. I've still spelt it wrong. Things are good, Keith. Good to see you, mate. So what we saw was essentially the Dow in it and the Russell both up, and we saw the S&P down, and the Nasdaq fairly well whacked again, and is now in correction territory. We'll see that on a chart in a moment. And just for those who are less familiar, when we talk about a correction, so pullback is usually up to around about usually 5%, 5 to 10%. Once it hits 10%, it's termed a correction. Once it hits 20%, where gold is to the downside, then that's termed a bear market. We're almost in bear market territory with precious metals, which is quite staggering considering the number of precious metals bulls there have been over the last few months. US futures are higher in Asian trading. It looks as though there's a bit of a pop today for no apparent reason. There's no great news come across the wires at all to help that along the way, apart from perhaps the bond yields haven't gone up any more since they did last night. Of course, there was the stimulus package agreed over the weekend. We are expecting that to be ticked off, and then money to be delivered prior to that unemployment insurance running out on the 14th of March. Asian markets are an interesting place as well. We are seeing the ASX up around about 1%. Again, some sectors doing very, very well, as in the US. The banking sector is doing extraordinarily well. And so local equity markets are looking to follow that US lead, primarily in those sectors which did well. And so when last I looked, the Kospi wasn't doing particularly well, which is a very tech-heavy South Korean index. The Nikkei is just above neutral, but we'll have a closer look at those later. The other, of course, big issue is the US dollar index, which is responding to those higher bond yields. It's now at a 6-month high. We're at levels not seen for a long time, and of course that's impacting not only on US dollar pairs, but obviously on precious metals also. And oil, surprisingly, looks very strong still on expected demand increases. Japanese, the JPY is looking consistently weak across the board. and that hasn't been helped at all by some weaker than expected Japanese data that came across the wires this morning. In terms of the data highlights, it's not a massive day, but we do have some relatively big figures, big numbers coming out of the Eurozone with the Euro GDP overall and German trade balance figures, which are always looked at quite closely with the Germans being primary exporters in that region. So we should expect some movement in the Euro later, whether that impacts on anything outside of equity markets in the Eurozone. So I guess we should expect to see the DAX and maybe the CAC 40 move a little bit on that news. That may or may not impact on US futures to some degree. But that's really the next key point, is what happens as that European data starts to come across the wires and European markets open. Let's just look at a couple of things in the meantime, and we'll start by looking at the futures. As I said, they're all looking pretty rosy at the moment, with the Dow continuing its move higher, up around 0.5%. The Nasdaq's got some recovery, about 0.7 up, but it's really the Dow and the Russell that are outperforming. Euro market futures are looking a little bit to the downside at the moment, but that may improve if we get a continuation of what's happening in Asia. And there's the USD at 92.50, which is quite a staggering number compared to where it's been. And we can see really there's very little else to hang your hat on in terms of doing well. We've got the commodity-based currencies suffering, and despite the push up in oil, can't believe that we're seeing Brent, although we've had a little bit of a pullback yesterday, up around that, testing that $70 level. But you can see the Canadian dollar is holding on okay. We might look at some of these crosses between versus the Canadian dollar as well as the USD as we go. But you can see the 10-year note is increasing in value, not by much this morning. But you can see on that little chart, that pop-up chart, how the 10-year note value has decreased. And of course, what that means is that the value of, or the bond yields associated with this go up. And of course, this is a futures contract. So at the moment, we're trying to find a bottom on that. And but to date, nothing happening. It just keeps on moseying its merry way down. And you don't really want to be in sugar at all. I'll just put a Brent chart up quickly just so you can see this in a little more detail. But you can see how this is highs. Not, if we put it on a weekly chart for context, this is highs we haven't seen really since the end of last year. So we're testing those key levels at $70. You can see how $70 is a key level. So we had 3 tests during 2019. We can see this is the level that was hit in January 2020, and of course it was support back here in mid 2018 and resistance here in early 2019. So this $70 is a really important level in terms of where we are now on Brent. I'll just put the WTI crude chart up. But a very similar story. We've got a $65 resistance on crude. You can see there without that little line I've put on. That just sort of illustrates this. In terms of economic data, as I said, some weaker than expected GDP numbers coming out of Japan. That's not helped the yen at all. Pretty innocuous data coming out of New Zealand, but we do have some business confidence numbers which have beaten last month's figure for February. But it's really what happens next is the important thing. We can see the German trade balance numbers there. Everything else I would ignore until we get to GDP figures there and the employment number as well. So Eurozone should move quite a lot, which, as I said, will impact on equity markets in that region, which may have an impact on the US futures, particularly if we have significant beats. But at the moment, you can see that GDP is in negative territory, so still in recession and expected to remain so. So anything that's positive in that is probably a good thing. Okay, so as I said, just do a quick check on what's happening. You can see the Nikkei's popped a little bit. It was neutral when I looked about half an hour ago. That seems to be gathering some steam. ASX is not really going anywhere, and there's the Kospi looking the weaker of the indices, simply due to the heavy tech weighting. Okay, so let's check in on some charts and just give this some context and look and see if there's anything around that we might be interested in. So we'll start with the Dow, of course. This has been the outperformer really over the last month, with those bond yields doing okay. And you can see it's actually pushing back up towards record territory. That 3,200 is a really important level. We tested it week before last and just failed to hold it with that market sell-off. But really, when the rest of the market was selling off 5 or 10%, really the Dow only pulled back 2%. And why is this? Well, there's some stocks which are doing very well. The value stocks are smashing it. We take a look at JP Morgan, for example. You can see that's testing highs. We'll look at Bank of America. We can see that shooting to the stars. There we go, it's updated itself now. So we had that little bit of a pullback and then a continuation of as is. So look for a break of 37.50 on Bank of America for the next leg up. If we look at some of the industrial stocks, look at Caterpillar, for example. We've been talking about this. This was one of the picks. This is one of the picks in last week's. What was last week? And that is heading back up to that 222 level, which we said would have us interested. The tech stocks that we pointed out, we had levels on them which would mean we were possibly interested in them. If we look at Zoom, no interest at all in this stock. Now it's broken the 200 MA. When we talked before, we said, look, we'd get interested if it broke 400. That doesn't look as though it's likely in the short term. Down in excess, even since last week, of nearly 30%, which is pretty spectacular. So tech really getting hurt. Let's just put an NDX chart on just to show you. So essentially, as I said, correction territory is deemed to be 10%. There's our highs at that point. There is where we're at now. So just around about 11%. We're looking to hold support. If I draw accurate, it's probably around that 12,350 level. So really pushing hard against that correction level. And that slight move higher in Asian trading really isn't cutting it at all. Quite choppy, obviously, on the way down as we've been. Markets have been very, very difficult to trade outside of the financial sector. Mentioned the US dollar index. Look at the US dollar index. It just keeps on going up. A lot of this is yen weakness. We'll have a look at a yen chart in a US yen chart in a moment, but obviously we're getting across the board weakness in currencies versus the USD as that now, as I said, hits highs we haven't seen since October. I call off precious metals. Here's gold. Let's take it from its high to where it is now, and you can see where if it does get anywhere near, so bear market territory on this, and this will precipitate more selling. If it breaks that 1660 level, that's when you can expect a next ream of selling. Let's just take it right out, and if we do get more selling, then really there's very little to hang your hat on until it gets down to around about 1583. Silver doesn't look quite so significant. We had this strange business going on here, but really the closing high there down to where we are now is around about 13%. So it's not been hit as hard as gold, which is very unusual. Usually if there's a move in precious metals, it is silver that tends to be the biggest mover in percentage terms. What this suggests is that central banks are piling out of gold. Don't see it as a good asset to hold at the moment. And maybe, just maybe, they're looking at cryptos. Now, I'll put this up, although there technically a crypto chart is looking pretty good. From a Bitcoin point of view, there is the level that we have referenced before at 50,000, just over 50,000. Okay, so 5,200. We've moved higher than that in the last couple of trading sessions and look as though we're up to test these record highs at around about 55. If we look at Ethereum as well, that has really had a very, very strong couple of days. You can see that breakout there of this level here. So technically, again, is this where the money's going instead of precious metals? One wonders. And so now we're eyeing up that 1959 level, but 1900 certainly looks on the cards. Okay, so let's have a look at some US dollar crosses, because these are all at key levels. Now the euro is in a really interesting place in that it's testing now the 200 moving average on the daily chart. Again, context is important. So this is the lows not seen since November, which correlates with what we've seen on the USD. You can see those last 3 days have been quite staggering in terms of a drop. So every single level that we looked at in terms of suggesting that this could be support has been essentially obliterated. And this is the absolute level. If we do get a breakthrough this, it wouldn't surprise us to see it drop another 100, 150 pips in a very short space of time, possibly even up to 200, as the next support looks as though it could be around about this one, I guess even a bit lower than that, maybe even 116.35. So that is almost 200 pips. If we look at the the US yen, as I said, the yen's been looking particularly weak, and that's just quite a spectacular chart. Put it on a weekly chart for context. We look as though a test of 109.68 is certainly on the cards on this particular contract. So if we put it on a daily chart, give us a little indication about how close that is, and it's extraordinarily close. It's only 50 pips away, but that level there could be the one that is the deal breaker. If we do get any further increase in bond yields, any further sell-off in across the board in equities, we could see that push higher again to possibly even up, dare I say, about 111. But US yen doesn't move like this usually. Again, if we just bring this right back, you can see you don't get up moves like this that we've had really since the beginning of the year in such a short space of time. If we look at the GB pound US, GB pound's actually held on pretty well to this level here at around about 138. So nice round numbers have been adhered to. You can see how we tested it 2 days ago. Really flatlined after open yesterday, so managed to hold on okay, and we're flat again today in Asian trading, not going anywhere quickly. You can see those short-term moving average crosses, those short-term moving average contemplating a cross, but you can also see that this has been accompanied with high volume, which suggests some repositioning. If we do get a bounce on here, I'll be watching possibly that level there at about 139 if you're looking at this long term. If you're looking at this short term, there's maybe a 50 pip opportunity if it breaks 138.50. But what's important in a market like this is A, we're nimble, and B, we don't try to force trades, and C, we position size accordingly. If you're not enrolled for tomorrow's inner circle, then I would suggest you do so. We're looking at matching market strategy to market conditions, which I'm just going to put a link in for now. So if you're not enrolled in this, then rock along. It'd be great to see you there. And I think it might be a session that helps, particularly in markets like this. Okay, so all done. That's all good. Now, so let's look at, logically, it would make sense to look at some of the end crosses. Let's start with the daily chart. You can see it's pushing to the upside. Once again, yesterday was the highest close that we've seen. We'll have to go back to a monthly chart that we've seen again since the beginning of 2018. Next level on here is around about 155, so a staggering distance up from where we're trading now. We'll look at the hourly chart. You've got some nice lines in the sand here. So we need to see a close really above this level here. So that's our key level. This is where we need to see the close above. The ATR is 20 on this. Oops. There we go, sorry. Let's just go back a step. There's the JPY there's the GB pound JPY on the daily chart. 150.70 is where it's trading now. So now 150.60 was where we're at. 150.70 we were looking at. We've got an ATR of 20, so maybe 10 pips above that close would be a potential move to the upside. And as I said, it's very, very difficult to actually find somewhere you can see there to pin our to plant our flag in terms of what sort of profit target that we might be looking at. So so that is where that's at. But look at GB pound versus one of the commodity-based currencies that are also looking interesting on chart is the GB pound Kiwi. So you saw that there was general sort of weakness in. So we would have put a resistance possibly there with where the 200 MA is, and we've broken that yesterday, and we're following through today in the session. In terms of upside potential on the daily chart, again, quite a significant move, potentially up to around about 195.70, so around about 140 pips. But again, if we put it on the hourly chart, we've got a nice level there that we can plant our flag in to say, look, that looks as though it could be interesting. Again, no reference point for quite some time, and a significant upside potentially in this. If we look at GB pound Aussie, then again, that's an even better picture on the hourly chart. That's actually shooting now. Just put on a 15-minute chart just to get context. So that's looking pretty hot to trot. So see where that ends up, perhaps in about 10 minutes time when the hour clicks over. On a daily chart, you can see how this level is important. We would have suggested that the resistance was at that point there on the daily chart. We'll take it up to where we are now. That's a 200 MA it's playing with now. So it'll be interesting to see where the whole day, once we get to US market close, ends up to see if we actually get a break of that. For those of you who are longer term trading, that's what to wait for. For those of you who are shorter term trading, trail your stop significantly just in case we get a pullback later on. If we get a strength in equity markets, we may see these commodity-based currencies just regaining a little bit. So it could be, again, it could be a nimble trade. Don't try and force it, but just don't hang around on this. If we're in, so if this candle on the hourly chart finishes in that top third, then you can see that increase in tick volume, suggesting that we do have some buy momentum coming into this. But again, nimble is what it's all about. Okay, so if we look perhaps for a little while at some of the Aussie share market, let's just quickly flick screens again. Let's get ourselves some up-to-date data. Now, some are doing very well and some are doing very poorly. So we've actually dropped off fairly significantly in the last hour. That's quite a spectacular drop off. Just check in on the futures and see what they're doing before we go into this. Yeah, they're looking a little bit shabby again. You notice that, recognize that the Dow and the Russell were both up around about 0.5%. The Nasdaq was up around 0.7%. You can see they've dropped off over the last half hour since we've actually been talking. Just going to have a quick flick through and see if I can see that whether anything is broken in terms of news. Oh, it's just some profit taking. We do have some news about COVID. COVID rates. The WHO have talked about COVID rates. Some COVID cases in some parts are rising again. But that's a real interesting move to the downside. So, as I said, really in the last 40 minutes. Last 40 minutes, we've just sort of dropped off significantly. We're now at the lows of the session. You can't count these really because this was market open. So we always get this staggered open on the ASX. So really it's 10 past 10, we get our real opening price. So you can see we're actually lower than that. So that's quite a significant drop. What's doing well? Well, banks are still outperforming. You can see there that that ANZ is doing well. CBA's up a little bit. Maybe the big four are perhaps outperforming. We'll look at Westpac. Yep. Transport, we'll look at Webjet up 3.7%. That's still going well. Qantas pushing up 2.5% again. They're still looking quite resilient. And then if we look at resources, you can see Rio up about 0.5%, so slightly outperforming the market. BHP down, so maybe a day off for resources. We'll have a look at some. We'll have a look at some of those. Yeah, the resource stocks are struggling a little bit. Seem to be dragging down the market perhaps a little bit. And Zip and Afterpay continue to look very weak. They've just been selling off significantly over the last couple of weeks. So waiting for something that says it's time to get back into those. We do like Afterpay at around about this level it's at now. Again, Flight Centre doing pretty well. Okay, let's have a look at some charts. Okay, so let's start with Afterpay. So we can see there we've had that massive move down to test this 200 MA. Are actually doing okay today in that we're off our lows. Now, what's probably quite important here is that we hold on to 103.60 by the end of the session. So although we have, you can see that gap down, we'll move back up to that key level. So we did actually test $100 earlier in the session, but that is looking pretty ordinary. So we're just waiting for something that says now might be the time to look at. If we get some support around that 103.60 level and start to move up, then we could start to look at this. ANZ have just continued to go. We've talked about this for the last few weeks. And we're just seeing it sort of move up again. These candles aren't compelling, which suggests that just could be running out of a little bit of steam. But you see, even when the rest of the market was a little shaky last week, ANZ was still holding on to reasonable gains. So although up for today, just looks as though we might be getting a bit tired on the banks. If we look at CBA, who essentially underperformed the rest of the banks because of this sell-off here, we're now edging back towards this key level to look at here at around about 88, 85. Look, guys, if there's anything you want me to have a look at, then just let me know. As I've said before, just smash it on in there and we'll do our best to have a look at it and give you some opinion. So outside of banks, if we look at LYC, which has been one of our favorites as well, that significantly pulled back on the daily chart. It was put on a candle, so we're re-looking at trying to find some sort of support. 570 might be the level to keep an eye on. And if we look at the resource stocks, well, these have outperformed significantly over the last little while the rest of the market has been in trouble. It's been resources, particularly BHP and the big banks that have done well. But now we're starting to look a little weaker. So we have that triple top formation going on there. It's a nice textbook triple top. And so this 48.60 level could be an interesting one. If we do get a significant move down below this, and possibly even at 47.40, that would be the level that I would be saying, look, this is going to really sort of start to ramp up in terms of selling. So just be aware of that over the next few days. If we look at the retail sector, not a particularly pretty picture, generally speaking, but JB Hi-Fi, again, we talked about this last week. This 200 MA looks to be important now. We can see here, I'll just bring it down here. That's the key level we're looking at, 46.35. If we get a break of 46.35, we could be up to test that around a 3 or 4% higher than where we are now. You can see that's looking like an ascending triangle around this 200 MA. So a close above 46.35 would suggest that a reversal has happened. If we just take off some of the noise with this, I'm just going to choose a different pen color because black won't show. Actually, let's just put on line chart. But you can see we've got higher lows and just that resistance there to battle on through. Kogan with the other retail stock that we're looking very, very shaky, and very, very shaky appears to be a continuation. We talked last week about a key level at 13.94. We've since broken that, dropped another $1, and we're now, if we just put it there, we're now in a long-term, this is a long-term head and shoulders pattern once it broke through there. And with really nothing much to hang on to, down to around about 825. So no reason at all to be looking long at this. No evidence of a bounce, and maybe even a potential short trade there if we get any further drop. There's nothing to, you can see there's very little here to hang our hat on. Perhaps this looks like an earnings gap here. So around about this 1240 level could be important. SGM, we looked at SGM last week as a potential upside. So Sims Metal Management, and sure enough, it's continued its move higher. That was the key level put on at $14. Yes, when was it? Thursday. Could be. Now we've broken these highs here. See, we've already come down and tested them once, so we're looking for a break of this pivot high here. So around about 1460 would have us interested in this. A close of that level would be one to look at. Now let's look at the travel sector, because that's been outperforming as well. If we just let these catch up a little bit. So just take Webjet out of it. You can see the importance of this level here. Bring it back up. And so we're looking once again. This would be a high close since the beginning of December if we break this now. So a close above an ATR would be 24. So a close above, let's say 580. If we were to ignore this candle at your peril. Okay, so this is a post-vaccine announcement candle. So for conservative investors, we're looking for a close over 605. You could look at it at 580. We talked Qantas. This obviously pulled back last week, bit of a retracement. So we had essentially a move back down to this key level here at around about 490. $5 was the level we've been talking about for some time. We look as though we're edging up, and this will be, if we close where we are now today at around about that 513, 514 level, that will be the highest close we've had since, again, the beginning of December. If you're not in this already, then we'll just put this on a line chart. And look, you can see the importance of this level. Maybe this is a more critical level at around about 526. But once we break that, then it could precipitate some significant buying up around 8%. So again, for those of you who have a slightly higher risk profile, then you'd be looking for around about 515 or 526, 525 for those who are slightly more risk averse. But undoubtedly money coming into this sector. We look at Flight Centre as well to see if that's the same, and sure enough, there we see it. Let's just get rid of some of these lines again just to make it cleaner. Again, using the line chart for some reference, some easy reference. We can see there, that's the key level at $18.05. We can see we've broken the 200 MA. Then we ducked back below that. Now we're retesting. So you can see the test of that level there, as well as in December, as well as in November. So this is the key level on this chart. So just a little bit of patience. It's another 60 cents higher, which is quite a lot. It's around about 3%. But patience would appear in this market to be a good thing to have. Any others you would like me to have a quick look at for you guys? Healthcare have looked pretty ordinary of late. No change there really. If we look at Fisher Paykel, let's just take it out to get context again. So we are at a key level to the downside. Short in healthcare has worked. We did talk about this level last week. We didn't even touch the sides on that. We just smashed through it with a vengeance. Now we've had 2 more down days. That candle's looking very bearish again. But if we do get a break, a close below this could precipitate more selling. That's on the weekly chart. You can see we're trying to hold on to it today. And if we look at Sonic, not a dissimilar picture. Again, if we look at this chart, last week we talked about this level here being the key one. I'm not sure whether any of you actually took any interest in that, but really difficult to trade in terms of where the candles are. It's been all over the place. Looked as though it made its way back up there last week. Looked as though it was going to reject a further down move, even finishing the top 10% of the candle. But look at that bar yesterday, and we've got some continuation of that today. On the 30-minute chart, you can see how we've rejected and moved back up over that key level at 31.75. So see where this closes today. But that is looking again very ordinary, very weak, and with quite a couple of dollars to drop before the next real established support at 29.35. You could argue there may be some pause around about this level, around about 30.21. That's $1.50. So that's around 5% on this stock. Yep, sure can, Anthony. Let's look at Zip. So this has been mutilated over the last little while. Now, the interesting thing about this is we are now actually down to a level which is important. This has been tested in trading today. Recovered a little bit again since the open. If we look at this, you can see we gapped down significantly. We've actually tested this level around about $8 and $8.10. $8.25. We've tested that 1, 2, 3, 4 times today already, but it doesn't look as though there's any appetite to buy this right now. So in terms of downside, at this stage is limited to, but if it does break 807, then all hell could break loose. We could see again mass amount of selling, which would take us down to around about 676, which is another 16% down. So just for context, we're down 41% since the middle of February. I mean, that's just a staggering drop in this sector. Has really sort of hurt CSR. Certainly sugar. Don't know how many times I've used that joke over the years, but let's have a look at CSR. Okay, CSR are looking pretty hot to trot based on that chart. Nice spot. Key level looks to be at 573, which is about where it's trading now. Notice we are at we've had one fairly significant attempt to move higher. Let's just have a quick look at sugar futures and see what these are. So sugar futures are down, which of course, let's just have a look at a sugar chart. So down fairly significantly since, since probably the last week or so, or 2 weeks, it's dropped quite significantly, down about $1.50. It's too hard to work out in my head. So around about 8%, and that is probably helping CSR. Let's just see how well that chart correlates to CSR price. So we'd expect CSR to have gone up in the last 10 days if it's cheaper for them to buy sugar, and sure enough, we're sort of seeing that. So we've got this, so we're looking at highs not seen since beginning of Feb. So we looked at beginning of Feb here. That was the last time it hit its high. It isn't quite at these low levels yet on the sugars futures contract. So we're getting an outperformance on the stock based on but there could be a sort of rollover futures issue going on. So in terms of downside, you expect probably if it continues its way down, then you could see some upside in CSR. Try and put this on a weekly chart to get context, monthly chart to get context. No, nothing. So really looking pretty good, but that candle doesn't make me very happy. So maybe if we break 580, or even, yeah, if we tackle 580, and so we're closing in the top third, 25% of that candle, then that would look okay. China 50, you can certainly have a look at the China 50. Underperformed significantly, not surprisingly. In fact, underperformed very significantly, heading down towards the 200 MA, much even worse situation than the Nasdaq. Once we broke through that 18,378, that was correction territory. And you can see that the market likes these key levels, 5%, 10%. So we're heading down towards 20%, which would be an actual break of that 200 MA. So we're holding on. This is a support level we're at now at 333739. So we're looking at today. We've got a rejection of a move below that. That's the next sort of support there. Way too early to consider this long, and I really wouldn't be jumping up and down about a short without 200. Excuse me, without 200-day moving average sitting there on the daily chart. IPL for sure. Let's just have a look at. I thought IPL were on here. So if we look at IPL on a daily chart, just give it a chance to catch up. That's an interesting chart, Anthony. Good suggestion, mate. So 280 looks like an important level on this. Again, not dissimilar to CSI in that we've had that early enthusiasm in the market has waned a little bit, and we've pulled back to that key level at 280. So the close of today's candle could be all important. If you were in this and it actually moved lower, you'd be thinking perhaps it's a profit taking time if it ends up sort of being somewhere down this area with a look to re-enter, perhaps if it does break 280. That would be technically what I'll be reading into this, but at this stage, if we're not into it, look very similar to CSR, as I said, looking for a break of that level there. Am I still bullish on stocks? That's a good question. Now, one of the key things is about long-term views is that if what comes to pass, you don't get the market response that you expected, then you need to look at what that is. So two things have changed since last week, or whenever it was. In fact, I've been bullish on stocks for an eternity. So the stimulus has been $1.9 trillion in stimulus, and the market didn't shift. In fact, there's been continued sell-off, with the exception of the financial sector. That didn't have that suggests that a lot of that was priced in, and the bond yields were as if not more important than that, and perhaps even contributed to the bond yield story. So at this stage, I've got to change my mind. I'm not bearish on stocks, but at this stage, it's difficult to see what tailwinds are below stocks for right now, apart from the fact that if we see bond yields stabilizing a little, because 1.6 isn't dramatic. It's been the velocity of it that's upset markets. So for now, it's almost a wait and see. I'm certainly think that the short opportunities, unless something changes, unless these bond yields continue to rise, then the downside could be limited in for right now. But I wouldn't. Neither would I be going. Neither would I be positioning long significantly, if that makes sense. So I'm possibly where we are now, not seeing the tailwinds that I saw before. The headwinds look as though they're as if not more important. So it might be the state of play where we get we'll find a range, trade within that until we get some more information. That more information, maybe the next round of earnings in the US, maybe a better news on COVID, and maybe a stabilization of bond yields. So it could be what's termed a stock picker's market if it finds a range. You look at the Dow and it's in a range. If we put an ASX chart up, which we didn't do and perhaps should have. Oops, not the stock. Then really we're still in a range that we've been in, despite some of the drops in the US. We're still in a range here between. So that was the last range we're in, sort of between 6,570 and 6,730. So we're still in a range here of really what is around about 2%. So it's not massive. And on a longer term range, even if we take the last dip, take this candle out of it. So even if we take this, even if we get very, very conservative about it, then that range is 5% top to bottom. So I'm not dramatically bullish, I'm not bearish on the ASX. And I think we may see ourselves trading up and down within this range for a little while longer. I think it's difficult to see markets moving up unless there's a change in the current situation. So I've changed slightly. Medium to long term, I remain bullish, but in the next few weeks, I'm less convinced than I was. Though if we start to get bounces off big numbers, of 200 MAs, of correction levels, then you could see a big run up. I hope that didn't sound too vague. It is a very, very difficult market to call for right now. Yeah, I can look at the DAX, which has had a pretty good, that's pretty interesting. So that's had a pretty good run up, and we're actually pushed through a key level there. So DAX has underperformed, certainly the US, but you can see there that it has actually really picked up quite significantly. If we get some good numbers coming across from the trade balance figures, we could see a push up in that. Disney, yeah, Disney were one of the ones we quite liked, and look, that broke last night. Probably broke the day before. Yeah, so there's its. We said $200 on this was the key level, and we've actually broken through that to some degree. So that's one. US Airlines have pulled back a little bit, but look as though they could be sort of starting to ramp up. If we get some good news on COVID out of the US, or continuing good news out of COVID, it wouldn't surprise me to see airlines doing well again. If we look at this, a massive rejection. That was a big down move, rejected it completely, and subsequently had a good session yesterday. There's the highs at 49.50, so quite a ways up to get to that. It's about 4% up to that. So much like the travel sector over here, there is better news going on in that sector over the pond as well. Microsoft, I know Microsoft were another one of my stocks of interest. We could see, I suggested a move over 240 was where to look at. That is obviously sold off since then, but if we look at this, it's sold off 6%, so far better performing than the Nasdaq as a whole. That's the level to look at 224 to the downside, which it tested yesterday. We've got an interesting doji type candle there going on. So yeah, look, so I don't think there's much change in terms of what I will be suggesting as I have done on the last couple of weeks in terms of it's really a tough market to call for any length of time. Most of the movements that are tradable are short term, and even those can turn on a dime. The particular points of the day where it appears to be moving is obviously beginning of the Asian, European and US sessions, but then it can go anywhere you want after the US market opens. So really difficult to trade anything to the medium term. Might be the sort of market, as I said, where you're nimble, you're in, you're out, your position size accordingly. We'll talk about that tomorrow night. Let's just have a quick check-in back on the ASX and just see where we're at, because this is a live feed in this. So we're holding that level at around about 1/3% up. Don't appear to be getting any worse since we started, so I hope that's useful. So that's what we're going to cover today. A little longer session than normal, but I think this set of market conditions merits it. So please continue to trade safe. Just position size accordingly. I think I've looked at everything. Just having one last quick through. Yep, looked at everything that I've been asked to look at. So have a good day. We'll see you at tomorrow evening's Inner Circle. If you can make it along, it'd be great to see you there. Goodbye. Take care. Trade safe. Enjoy the rest of your day.